everyone. We are here with Caleb Silver. Caleb is the editor-in-chief of Investopedia, an award-winning financial and investing educational website that's been around since 1999. Prior to Investopedia, Caleb was the director of business news at CNN and the executive producer of CNN Money. Michael Batnick is here as well. I'm so excited to have Caleb on because we are going to be talking about Investopedia's top terms of 2023. Mr. Silver, welcome to the show.
So good to be here. Good to be back on the compound and to see you guys.
All right. First, let's talk briefly about what the origin is of this list of terms. How does this work?
Every year every month we're looking at what our readers are looking for. But at the end of every year, we like to see what terms or definitions or words on our website trended the most outside of their normal traffic range for the longest period of time or for a very concentrated period of time that drew kind of everybody's attention to them. So it's not the most trafficked terms by volume, because those will always be EBITDA and
the perennials,
Sharp ratio. Yeah, you'll always get those on Investopedia. Those are monsters. But we're talking about the ones that really popped this year and sort of took over our consciousness and took over our readers' interests. And those are fascinating because it gives you insight into what was going on at the time and why they were looking into it. And I love when we do this every year because it's just like opening up the box and saying, what was creeping around in the backs of our minds that made us want to learn more?
Michael, we should start from 10 and count down to 1, right?
That's smart.
That's the right way to do this. So is 1 the most newly trafficked term and 10 is lesser? Is that right? Okay.
Yeah,
right.
It's all measured by volume, but it's not necessarily which one had the most traffic. It's the one that had the most sustained or concentrated period of traffic that drew the most eyeballs at the time. But they're all interesting in and of their own right. The top 5 are definitely the ones that kept popping throughout the year. And number 1, of course, was the one that sort of dominated.
Do you have any sense of the audience of Investopedia? I'm going to guess it's sort of all over the place, probably skewing a little bit younger, but do you know what your average sort of profile looks like?
Yeah, absolutely. They're probably closer to your age than they are to mine, somewhere in their 40s. A lot of self-directed investors. Used to be more heavily male skewed. Now it's a little bit more even, probably around 60-40 when you look at the composition there. But it is a lot of, again, self-directed investors throughout the United States, but we also have a big global audience. When we look at the top search terms, though, we're mostly looking at our U.S. audience. We're about half U.S., half outside the U.S. So we're talking about 13-odd million people every month, unique visitors coming to our site looking for something. And as you guys know, not a lot of people browse Investopedia except for maybe me and maybe Ben Carlson, but people come there for a reason. They're searching for something either through Google or they're coming directly and they're searching in the search bar because they have intent. They want to know something very specific. Yeah,
you guys are really like a cornerstone financial industry site. It's almost like a staple, like something that everyone just has in their cupboard. You have to use Investopedia.
If you Google like a financial term, I feel like there's like a 90% chance that you click on an Investopedia
Yes,
link.
And you're going to get what you came for is the more important part of it.
Hallelujah. We've been around since 1999. That's 24 years on the internet. That's like 240 years in real life.
So what I would say to Michael's point, and then when you do land there, actually, it's a paragraph of information or more if you want more, but it's not another link to somewhere else. It's not 85 banner ads. It's not a video you don't feel like watching. It's the actual information, believe it or not, which is so rare these days. So I think you guys do a really great job. All right, let's start from the 10th term on your list, racketeering. This is on Investopedia. Tell us how that happened.
It's one of our most popular terms because racketeering, is a group of people conspiring to do a criminal act together. But it always pops on our site every year, usually not because of financial reasons or a business involved in racketeering. In this case, it was Georgia versus the former President Trump, and the racketeering case brought on by Fulton County. That drove the most interest, but there was also Shine, I believe, the luxury retailer, charged by some of its independent artists for racketeering, stealing some of their designs, and a conspiracy they claim. So this word pops every single year. I think it popped last year and the year before, but the year before it was because of the rapper Tekashi 6ix9ine, who was accused or I think charged with racketeering. It's not necessarily a finance term, but it's super popular on our site, and we have pretty good search results for it, which is why it usually makes it into the top 10.
Okay. Assumable mortgage. Where did this come from?
I've never even heard that term before. What does it even mean?
Well, I had to look it up too. This is people getting creative about their mortgage. This is me, if you're selling me your house, Josh, me taking on your mortgage instead of going to a lender to get my own. And with rates, as you know, 30 or above 8%, people are getting all kinds of crafty about how to buy a house if they really wanted one. So the assumable mortgage got really popular with people looking for different ways where they could actually make that purchase, because for a lot of people, we know that was out of reach.
Let me read your definition. The spike in the 30-year fixed mortgage to more than 8% this year made home buying impossible for many would-be buyers. The U.S. housing market has been a deep freeze all of 2023, forcing that creativity. This is using an assumable mortgage, effectively transferring the existing mortgage from the buyer to the seller as part of the transaction. So if if interest rates are going to be higher for longer, this could be even more popular in 2024. Do we know how many of these things are getting done?
Yeah, I don't have the exact number, but we know thousands were done, or at least people were thinking about doing it.
A lot of people
to
were
our
thinking
site
about
to
it.
learn what they were, and then actually going off and doing it. But I would love to know the final tally. I'll get that for you next time for sure. But
I would imagine
it's just interesting.
Yeah, the banks are probably thinking about this because banks want transactions. Everyone wants transactions, by the way. Everyone working in real estate is biased toward wanting there to be more activity, not less. So I would assume somebody will productize something where somebody is desperate enough to sell the house that they're willing to eat part of the cost of the buyer's mortgage in some part of the transaction, as long as they don't see it and feel it. So
it's just a creative way to get it done.
Okay. All right. Love it. This is weird. BRICS. If you and I were doing this video in 2004, I would certainly expect to see this term, but it's 2023. So why are people talking about the BRICS?
I think this was popping because of all the talk about OPEC and OPEC Plus not taking dollars anymore, going off the dollar. I think it was because of sort of the lack of juice in U.S. Treasury bills. Our traditional buyers of those treasuries weren't that interested this year. Obviously, we had the big spike in yields. So I think this is people thinking about a new paradigm outside of the U.S., where it's Brazil, it's Russia, it's India, China, and others coming together outside of the traditional power structure of just the U.S. versus China and other countries like Europe in the middle. So I think that's what got people thinking about this. And when we look at when this term was trending, it was trending right around that time when there was that talk of de-dollarization and OPEC and others not accepting dollars going forward. That's why this term popped.
I was going to say that you maybe need to hire new engineers because your search engine is wrong. There's no way anybody was searching for BRICS, but okay, maybe they were.
Maybe they were searching for terms that are on the BRICS page. Is that
maybe
possible?
Maybe they were looking for Pink Floyd, another brick in the wall. But I can tell you, people were coming to this term.
Maybe these were home improvement search. Okay, Treasury bill. This makes perfect sense to me. This was the year that investors actually started to talk about Treasury bills for the first time in, 30 years. Has there been a reason for anyone to search the term Treasury bill up until now in a really long time? I don't think so.
No, they've been boring. And this year they were pretty exciting. And one of the most popular searches beyond the term for what is a Treasury bill is, when should I cash in my Treasury bill? Maybe a lot of people have those from their communions or their bar mitzvahs, wondering if it's time to cash in. So we have people looking all the time on Investopedia, when's the best time to actually cash in on that?
To sell a Treasury bill.
To sell it, yeah.
Let it mature. It's 6 months.
Caleb, was there anything that you learned about T-bills that you didn't know? I feel like it's a pretty boring topic, but given that this was the year of cash, anything that you didn't know before 2023?
No, but it gave me a good chance to refresh who the top purchasers of our T-bills are. And with all these new auctions coming out and all the talk about no appetite for Treasury bills, it really put that into a lot of perspective for us. So I think that's why people were searching for Treasury bill, not just when to cash it, when to sell it, but also what is it with this lack of appetite for what was thought of as the most important, most widely held, safest, and most trusted asset on planet Earth? I think that's being called into question. I don't think there's any doubt about that. And I think that's going to be a trend, too, going forward.
Debt ceiling also makes a ton of sense. I feel like this is just something we're going to do. Yeah, we'll do this every 2 or 4 years. But the debt ceiling this year, there was a credible threat of a shutdown. We had a House Speaker roll the dice and actually get kicked out, which I guess was one of the more notable political developments, Kevin McCarthy. What else do you think prompted this to be such a popular term this year?
I think it's just the circus that goes on every 2 to 4 years around this, or almost every year now. Is it going to happen? What happens if it happens? What does it mean to my investments? What does it mean to the economy? People are just wondering, why do we always go through this silly exercise when we know it always ends up with us kicking the can down the road? That's why this pops up. I expect to see it again next year.
Mike, you did some content on, or maybe it was Ben. I get you two confused. One of us wrote something really good on our blogs about the stock market's reaction to prior debt ceiling debates or issues. Do you remember that?
That was definitely a Ben thing.
That was probably Ben, right?
I don't concern myself with such trivial matters.
Okay. Inverted yield curve. This is probably a multi-year situation at this point. Last year too, I'm guessing.
That's right.
Okay.
And it was one of our readers' top picks as well. Inverted yield curve, been in this situation all year. Usually, as we know, sometimes almost always predicts a recession. We've been waiting for that recession for a really long time right now. But with people pounding the table on when's it going to happen because the yield curve is inverting, and we had these extensive, it wasn't just the normal 2 and 10 yield curve. We had yield curve inversions all over the place this year. It was like a yoga studio up in here.
The 530s were inverted, like everywhere.
Yeah. So it was like Bikram yoga all over the capital markets this year. So inverted yield curve got a lot of attention. Still in one in some places. So I expect that to continue as well.
Wait, hold on. What's the Bikram yoga reference?
Just inverted yield curve reminds me of like a yoga stretch or a vinyasa flow type movement, but it really is the inversion of the yields of the long and the short bonds. But it makes me think
like
of yoga.
An upside down downward dog. I got it.
Exactly.
Yeah. So I don't know much about that. This is something, Mike, you did write about. I think like we even did something. Oh, we had Campbell Harvey on, who is the godfather of the yield curve indicator, who first discovered what happens after inverted yield curves and then when they uninvert, et cetera. Like we did that content all year because this is something that's on people's mind. And anytime people would get excited that, the economy's improving, you'd hear, yeah, but what about the yield curve? It's still inverted. It's been inverted. It's one of the longest inversions ever. So this is something that people are still concerned with. And it hasn't uninverted yet. Quite like it hasn't gone all the way just yet.
I know. And think about it, as many times as you say it on TV or I say it on TV or you hear it across financial media, it gets people wondering, what is this actually? Even if you already know what it is, sometimes people need to do a refresh on it, and that's why they come back to Investopedia.
Okay. Certificate of deposit. I'm guessing this is because of just higher short-term rates.
That's right. Money in the bank this year. We had certificate of deposit was trending. Money markets were trending. High yield savings were trending this year, but CDs definitely had the most attention put on them. And I can tell you every single day for the past 8 months, there's one of the top searches and top articles on our site is, should I buy one? What's the best yield right now? Where can I get the best CD right now? So a lot of people shopping for them and wondering how they work and wondering how they can fit them into their portfolio.
Hey, Caleb, and I'm not going to spoil anything, but if you saw the top 5 list that we're about to get into, or that we're actually in the midst of, there's no way that you would think, yeah, S&P's probably up 20% on the year.
No, it's people are playing such defense this year, but yes, the stock market's up 20%, which is so interesting because we think one thing, maybe we fear one thing, yet we do another. And that's just kind of been the case all year. This has been the rally people love to hate or not wanted to believe. And here we are up 20%. Right.
The Nasdaq's up 50% and everyone's searching for CDs. And all right, let's get into, I would have picked this as number 1, artificial intelligence. I would imagine this is going to continue too. This probably won't be off the list next year. Maybe I'll be wrong. I kind of saw this coming in January and February. I thought that this would be a really big theme for the year, and it turned out it was. Tell me what was leading people to search for this term that landed them on Investopedia in particular.
Yeah, well, I think it was the year it kind of went mainstream in a lot of ways, even though it's been brewing and being developed for years and years. But this was the year it kind of took center stage, decades, as you say. So I think people were looking for, this was our readers' top pick as well. When we survey our readers, we do it every 2 months. This was their top choice. it was the investing theme of AI and how AI stocks really broke out, or AI associated stocks really broke out. Just think of the NVIDIAs of the world, or even the Palantirs of the world for a while. So there was the breakout, the investment opportunity, the ETFs around AI, but also AI touched nearly every industry that we can think of in our modern economy. Think about the Hollywood strike. AI was a big part of that conversation, right? Think about a lot of the questions about, coming back to work, the future of employment, the future of productivity, all of it really based around what's going to happen with AI. And even in our business, in the publishing business, people thinking about ChatGPT, AI, can you get your content written by a robot right now? And is it believable? So we're on the fence of, we like, as you say, you come to Investopedia, you find what you're looking for. That's written by real people. So this was right in the middle of the conversation with so many things, but also a great investable opportunity, and one we haven't seen in a long time. I think that's what was driving people to it.
I feel like, Michael, who told us that 35% of S&P 500 earnings calls had AI mentioned? Do you remember what that was?
Is that from Quarter?
Maybe it was from Quarter. So we had research showing that I think 35% of all conference calls this quarter, the CEO mentioned AI.
It could have also come from Bank of America. They do charts like that.
Oh, maybe. Yeah, they scrape all the conference call text. Okay.
Right, but also like this was crypto a couple of years ago. This was cannabis a few years ago. We get this every few years. So this was the theme this year. Maybe it's going to be the theme next year too.
Well, I think this was like less bullshitty than a lot of prior themes, because you and I are old enough. We remember 3D printing as like the tech theme of the year. Like we remember things that really didn't pan out. So this was one of those things where, no, actually, it's like hundreds of billions of dollars being spent to modernize cloud infrastructure. It's like real.
I haven't thought about those 3D stocks. Remember 3D printing? Triple D was the ticker.
I used to keep a list of all these like buzzwords for each year. I don't know why I stopped.
So it was 2012. Was this 2012 or 2013? Let's see.
I think 2012.
So the madness. So Triple D peaked at a $9.4 billion valuation in January.
I was trading that thing. Yeah, I was in it.
Hell yeah. It's $740 million today.
Okay. Well, artificial intelligence is not 3D printing. I think we all agree. Mm-hmm. This one's not surprising. Bank failures. There must be a lot of different terms. Bank failures just being a catch-all. But this was in March and April. This was the hot button topic on Wall Street, and it definitely carried over into Main Street. People have money in banks, and they hear these headlines, and they want to know how does this affect me? What do I need to know?
Yeah, that's absolutely right. Banks are supposed to be boring, but they weren't boring this year. We had several failures, lots of threats of failure, and a lot of readers are coming to us to learn about it. But I think you're right. It's is my money protected? How much of my money is protected? Do I have to go full Giannis and put my money in like 10 different banks to protect my money? What about my investments?
I think it was like 25 banks or something. Yeah, do you remember that? I forgot. He's a genius.
He kept Green Bay in business. So I think people were wondering that. And I think people became really smart about the way the FDIC works, the way Treasury works, a lot of these extraordinary measures taken on by Secretary Yellen and the Treasury Department to make sure that customers remain whole here. So bank failures was a hot topic, certainly back in the spring. Hopefully we won't see that again, but you never know. I
actually don't think there'll ever be a bank failure again.
Moral hazard? I think it's going to be allowed to happen?
Well, they didn't allow it this time. They found buyers. They did prearranged marriages for 3 banks, and that forestalled the need to do anything else.
No, money moves too quickly these days. Like banks can fail in 24 hours. So they had to step in, and they did, luckily.
Yeah, but I think this is the protocol now, and they are not deciding between, you have a balance over $5 million and we don't cover that. Bullshit. Never going to do that. That's over now. So, and there was no act in Congress or anything. The regulators decided it's too risky for the system to have anyone lose their money. And therefore, FDIC insurance is de facto unlimited. That's a new change that took place in our economy this year. And I think not very much remarked upon other than in that moment. People are just like, okay, that's what it is now. You see it that way?
Well, I think people just brushed over the fact that banks were failing. If you looked at bank stocks, yes, we had some big sell-offs, but then it just bounced right back. People just assumed what you said was going to happen. The FDIC is going to take care of this. They can't have banks going under. To Michael's point, money
That's
does
right.
move too quickly. Just the whisper of a potential bank failure or weakness, or if they ever mark to market their assets, given bond prices right now, they might have to go under. Just that was making people move money out of the bank or sell the stocks off. So this was one of those things they had to stop immediately, and they did. And now a lot of people got a lot smarter about the way banks work. But to your point, banks now kind of work a different way, don't they? Because they have this backstop.
I don't think there's any upward limit. The other thing I want to say on this, and then we can move on. We were talking a lot about this in the moment, and one of the points that I tried to make, the FDIC is one of the few areas in government where I think everyone can agree it works really well. It's apolitical. It's effective. It's not a ton of people working there. They've never, ever had a depositor lose money. The insurance system, they go to the banks and they say, okay, these are the new rates, which, they obviously have no choice but to do after a year like this one. But the whole thing, it actually works pretty well. Taxpayers have never been on the hook for an individual depositor having a problem. The FDIC has made it so that wouldn't be the situation. And I think that's like a positive. They don't have that same system in other countries. Mike, you want to take the last one?
I think the number one item, and I'll turn it over to you, Caleb, is consistent, unfortunately, with a lot of the themes that we've been talking about this year on the shows, which is the disconnect between how the economy is actually doing versus how a lot of people actually feel the economy is doing. So with that, why don't you take it away? What was the number one search term?
Yeah, the number one search term was the American dream. And I can tell you, as the editor-in-chief of Investopedia, I've been here 8 years, I have never seen this pop up until this year and have the sustained interest that it had among our readers throughout the year. So why were they looking at it? And what is the American dream? Well, we know what the financial services industry has kind of turned it into over the last several decades in terms of promising us the dream, the retirement dream, the family, the extra home, the vacations, the dogs, et cetera. But I think this was people coming to grips with the fact, especially younger people, that they may not be able to have, or in their minds, they may not be able to have a financial life better than their parents. They may not be able to do better. They may not be able to own a home with mortgage rates over 8%, home affordability pretty much at an all-time low or at a multi-generational low, a bump in wages, but not a big bump in wages, and all this sort of the downbeat around the economy and what's happening. I think people lost sense of their ability to overcome and be able to have what they want, that financial freedom, the ability to build wealth for the long term, create generational wealth. I think I really felt this, and when you look at who is checking this out, it's a lot of younger people concerned about this for the first time in a long time, and I think that's significant. I think there's something metaphysical about this. I actually had to look it up to see where this came from, and in our article we have it. This was coined by a writer in 1931, guys, named James Truslow Adams in his book, Epic of America. Think about that. 1931, depths of the Depression. This guy's writing about what that dream could be, should be, and it really was more like the Declaration of Independence, that anyone living in this country should have the ability to make money and be able to live out their dreams and build a life of purpose in this country. And I think that feeling, especially by younger people, is kind of getting lost right now.
Look, I think that there's some element to this being a search term also because of we had a lot of immigrants come and be sent to cities like New York and end up living on the streets. And not to get into the political aspects of that, but we're talking about thousands of people. We're not talking about a few dozen people and multiple cities all over the country. And whose responsibility are these people while they're here? And how do they get to where they got? And we saw articles in the last couple of weeks where they're going back home. And they're basically saying there's no such thing as the American dream. It doesn't exist here. And depending on which end of the political spectrum you are, you're either discouraged by that or really happy about that. But American dream is one of these things that I think is a little bit fungible, and people can twist it to mean what they want depending on the point they want to make. I also think, Caleb, we should point out the older millennials were equally concerned with whether or not there'll be an American dream for them, because a lot of them graduated college during or in the aftermath of the great financial crisis. And it's 15 years hence, and many of them now are in a much better position in their life. They've probably bought the home by now. They're probably entering their peak earnings years. Many of them have had children. They've discovered the stock market. We know from the data. So I feel like this is something that every generation goes through. In the early days, there's always something to complain about or worry about. Right now, it's inflation and ridiculously high shelter costs. For the next generation that Googles the American dream, their concern might be something completely different. My parents' concern, it was probably being drafted to fight in Vietnam. Like, are we going to have our American dream, or are we all going to, be sent off to the jungle somewhere? So I think that this is like a recurring theme. Every generation has its time where they feel discouraged or disgruntled by the state of the nation. I know people will say, yeah, but it's worse now because blank. And I won't argue with them because I have other things to do. But do you agree somewhat with that idea?
100%. I think it's all of those things. And I think you could be a multi-generational look at it. So people looking back and saying, I got to it. Other people saying, I'll never get to it. People just arriving here saying, what is this? But then also, Josh, think about what's happened to some of our great cities across America too, right? In terms of just going to a downtown in one of the major cities in America, it doesn't feel so good anymore, right? It feels like something's fallen apart here. Talking about cities like, San Fran, which gets plenty of bad press, even New York, right? We get plenty of bad press, but there is this feeling like, is this ever going to get better? Did the last few years just take us off of any sort of a trail we were on to make things better? So I think there's some discouragement, and I think there's some people actually who are thinking there's potential hope here. And we know just by folks who are investing, as you say, who are building lives and careers here, that there is still that pursuit of it. I just think I got disconnected a lot, especially in the last year. And inflation's a big part of that, particularly the housing part of it, which is the one that gets people's attention. Even if they don't want to buy a home, the notion that they'll maybe never be able to do that, I think kind of gets in their mind.
Yeah, I think today's 20-somethings have a difficult situation they're facing. I don't think there's any way around that. And I think it would be unfair to act as though the rents that they have to pay, how out of reach it looks like to ever be able to afford a home, the credit card borrowing rates right now, the cost of living, healthcare costs. It's daunting for this generation of 20-somethings, and I don't think anyone would say otherwise. But what people with perspective would say is, okay, now imagine being in your 20s in the 1930s. Now imagine being your 20s, right? So every generation goes through some version of this, and for some it's harder than for others. And a lot of life is the luck of the drawer and when you're born. A lot of your investing returns will depend on when you started investing, something that you have very little control over. And this is part of the American dream, is that there's risk. Like, it's not free. Sure. And maybe that's the best way to bring it full circle.
Absolutely. Well, I was just listening to a quote from Charlie Munger, rest in peace, who was talking at a recent Berkshire Hathaway annual meeting. And he said, look, if I can still be here at 90 odd years old, showing up at this meeting, surely you young people could handle a little inflation. Now, Charlie can say that, but
I can't say that.
It's all about perspective. And his partner Buffett always says, you'd rather be born right here in America at any time in the last 50 years than anywhere else in the world. So it depends on perspective, who you are. And if you got a few billion in the bank, it helps too.
Any predictions for terms that might pop up in 2024? That's a hard game to play.
It's hard, but we know we got an election year coming up. So anything around what happens with the election and the stock market, I think, is going to be on people's minds.
Voter fraud. You could take that one. You could take that one to the bank. Someone's going to be saying that.
Racketeering will probably make a comeback as well. I think AI will be around. Any iteration of AI, will come up, whether it's generative AI or the new fangled AI, that'll probably pop up in 2024. But hopefully we won't see things like bank failures, and hopefully we'll get more people looking up, constructive ways to build wealth and ways to build portfolios. Even though it's good to see the banks, getting some business and that there's money in the bank, that's been really important for savers of all ages, but especially older savers. I think our readers in general like a nice steady bull market. So they're pretty happy right now. And when you look at sort of the stocks they're looking at and what they're trading and what they're investing in, and we survey them every couple of months, they are finally warming up to this rally 20% later. But in the last couple of months, certainly in the last month, getting a little bit more promiscuous with their money.
Right into the top. I love it. Hey, thanks so much to Caleb Silver. Thank you for joining us. We really appreciate it. Everyone, if you are hearing people like Michael and myself talking about terminology and jargon and you are unfamiliar with what we're referring to, your go-to place is Investopedia.com. That's where you'll find out exactly what we mean, and possibly you'll be able to come back and say that we don't know what we're talking about someday, right? So, and someday, and it might not be that long before you're an expert too. So this is how people learn. We didn't have this when I was growing up. We have this now. It's great. Take advantage of it. Caleb, thanks so much for sharing the top terms of the year. And hopefully we'll see you next December with the 24 vintage. Sound good?
I'll come back. I can't wait. Thanks for having me.
All right. Take care, guys. Thank you.